YouTube fam, Fat Man Zoom here, back with the morning watch list. 4 stocks I'm going to be watching today. Stick around to the end. The last two might be a little bit interesting to you. I have one that's a trending ticker that I know you guys are going to start asking me about, so I'm trying to get ahead of the game. And then another stock that's quickly moving up my favorite social media stocks list. Old dog with some new tricks. But let's get right into it, guys. If you don't know who I am, Fat Man Zoom. We focus on long-term swing trading, long-term investing, and helping you become a better active investor. We have at number 1, Etsy. So Etsy is becoming a great asymmetrical trade opportunity. I think this is a 5-to-1 upside ratio, risk reward ratio. You can see here it's below the 50-day moving average. But it looks to be settling out nicely. I have about 197 would be my downside on this, but this could be going much higher. This has been beaten down, obviously, because of the concerns around sustaining the growth that it saw of the pandemic. Saw huge numbers as far as revenue is concerned, being the number 1 mass seller. So there's that to compete with. But like we said about all e-commerce, Etsy, very niche. We think it's going to continue to grow. We don't think consumer habits are going to change. I actually think there's going to be increased spending. We'll see if they can keep pace with their revenue growth year over year. But I love Etsy. Again, 5-to-1 asymmetrical trade opportunity. Penn, beaten down. Portnoy getting a little frisky. Sex tapes coming out. No fear for us. Guys, this is another great asymmetrical trade opportunity. This is a 6-to-1, in my opinion, right around a support level. You know, I think this is good above 97. If it's below 100, you gotta continue to buy. You gotta add to it. I know this sounds crazy that it's even at these levels, considering the other gaming stocks are moving. But I think the issues they're facing are temporary. Yes, March Madness is over, but we haven't seen those numbers. Should be record numbers. Also, New York's on the cusp of legalizing online sports betting. On top of that, in April, we're going to see Indiana, is it? I believe it's Indiana is next. And then in May, it's New Jersey. So we have 2 states that are coming. For some reason, I'm questioning my Indiana. But we have 2 states that are coming, and that should be exciting for companies like Penn, who are going to continue to gain steam. $150 stock. I'm not going to shut up about it. You heard. Next stock is, oh, shoot, I have 5. What am I talking about? Next stock is Baba. Guys, we're talking about risk reward, taking chances. Baba is a Chinese stock that has been beaten down on the U.S.-China relations, the tensions specifically. The new administration was hoping to smooth it over. It's been a bit of a bumpy ride, but I believe it's a focus for them to have good foreign relations, especially with a country like China. So this is risky. Understand the risk in getting into this. Definitely scale into it. Baba's starting to form a little bit of a downtrend. Is trying to decide where it's going, what it's doing. Could be sideways here, but I love it at these levels. And I think that the risk is going to pay off. Huge upside for this company. If you guys don't know, Baba has one of the biggest, I think it's the 5th largest cloud platform in the world with Alibaba Cloud, one of the biggest e-commerce sites in the world. Like this is a monster. Obviously, as the most well-known Chinese stock on the New York Stock Exchange, it's going to be impacted anytime there's tensions with China. But I think this is good risk reward, considering a lot of other stocks have been beaten down. Considering other stocks are at their all-time highs. My apologies, I can't really speak today. Swaggy stock, trending stock, Wall Street Bet stock, ASO. I know I'm going to get nonstop questions about this over the next month or so. Academy Sports and Outdoors, they crushed their earnings at the end of March. On Monday, they just went off. You can see it's trying to pull back. I like this in general as a reopening, as people moving outside. They had record sales, but I don't want to get in here. I'm going to wait. Hopefully it can come down to that 27 mark. But one to certainly keep an eye on that's now on the forefront of the conversation. And then my unsexy stock that all of a sudden is sexy, Twitter. Where have you been all my life? I don't understand. Twitter, it was just announced that they were in talks of buying Clubhouse. This is why I love it. It doesn't matter if the talks broke down and they're saying the deal isn't going to happen. First of all, never say never. They still could get Clubhouse. They're clearly focusing on creating something like that with their Twitter circles. And if they can add Clubhouse to the mix, that might be huge. It's clear that Twitter has always lagged and they're always trying to play catch up and they're not innovative. But I believe that they're making a shift and they're really looking to spend capital to become one of the major players as far as the social media landscape is concerned. Also underrated as far as organic growth opportunity. And more importantly, I think their staying power and their model is different than their competitors, the likes of Facebook, Instagram, Snapchat. So if they can continue to further differentiate themselves, I think this will be a great opportunity for a stock in the long term. I really like where Twitter's headed, and I think this is definitely one to keep an eye on. It's still my number 3 behind Facebook, Snapchat, and Twitter as far as Facebook, Snapchat as far as ones to buy, but I'm liking it, liking where it's sitting at. But with that being said, those are the stocks to watch today. Guys, like and subscribe. Got another video coming out this evening. We'll see you in the next one. Batman Zoom is out. Peace.